Hi everyone, and Assalamualaikum to everyone. We are from Group 6, and our group members are Nur Alia Akila binti Muhammad Fahmi, Nur Marina Yuslini binti Muhammad Tarmizi, Nurul Syafiqah Sari binti Muhammad Azlan, Nurul Izzati Najwa binti Muhammad Azmi, and Raja Sharifah Nashruni binti Raja Muhammad Zamri, and the last one is Nurul Izzati binti Badri. Our topic for today is Introduction to Insurance Planning, Introduction to Retirement Planning, Importance of Insurance and Retirement Planning, Current Issues, Statistical Information, Conclusion and Recommendation.
Insurance is defined as a contract which is scaled a policy in which an individual or organization receives financial protection and reimbursement of damage from the insurer or the insurance company. Insurance policies will assist you in covering the cost of any necessary future medical care, hospitalization, contracting any illness and related costs. Insurance policies can help to offset the family financial loss caused by the ultimately demise of the family's primary sources of income. The family can also pay off any bills that the insured individual may have racked up over the course of his or her lifetime, such as houses loan or other debts. In the event that you pass away in the future, the insurance coverage will assist your family in maintaining their quality of life. Plans for insurance will assist in safeguarding your child's educational future. Even when you are not around, they will see to it that your children have enough money to live comfortably while pursuing their goals and desires without giving anything up. Retirement planning involves determining retirement income goals and what is needed to achieve those goals. Retirement planning outlines goals for retirement income as well as the actions and choices necessary to achieve those targets. Planning for retirement enables you to have a life that is less anxious and stressful. You may live stress-free in retirement if you have investment that produce consistent income. When one reaches retirement age, they may relax and take pleasure in their labors. Retirement describes the time when a person is no longer able to work. Therefore, this is the time when the money generated should take care of everything. To do this, one has to start saving for retirement at a young age. Yearly preparation will help to lower the cost of retirement. Lastly, by making retirement investment, you may earn returns that beat inflation. A bank savings account will not provide a high rate of return on your investment. To put it another way, the interest gain will not be enough to support a pleasant retirement.
Retirement is a reality that happens to working professionals often starting from the age of 55. The main objective of retirement planning is to achieve financial independence after retirement. Retired professionals often face financial challenges due to the lack of a monthly salary during employment. With a retirement plan, individuals get to plan for their future and gain financial independence even when they are not earning their monthly salary. The importance of retirement and pension planning is to live a comfortable standard of living the retirement and to determine the level of income needed during retirement. The next one is the importance of insurance planning. It is important to choose the right type of insurance policy so that the benefits of the policy match your needs as closely as possible. Needs vary from each individual and depends on factors such as age, marital status, number of children, and employment status of spouse, and so on. With insurance planning, an individual get advantages that meet their needs. They also receive the most insurance protection for their money.
Next, we are going to look at the current issue of insurance planning. During the pandemic COVID-19, a lot of people are affected by the wave of lost income and loss of lives. Pandemic COVID-19 have nudged Malaysians to insure and protect themselves of unexpected events in the future. People are now more interested in the importance and relevance of insurance as they realize that they are not prepared for the misfortune that might hit. In fact, a lot of Malaysians does not have enough savings to cover illness and loss of income. It is recommended to have at least 6 months of salaries as saving. However, it is not the case for most Malaysians. Besides, insurance companies now are adding COVID-19 coverage into their policies. The addition is very much relevant today as the COVID-19 cases are still high. The addition is also great as they didn't really cost much from the original policies. For example, companies that offer COVID-19 coverage is Alliance Malaysia, Prudential Malaysia, and Etika Malaysia. Next, we move to the current issue of retirement planning. What are the problems of retirement in Malaysia? These are increase in population aging, lack of finance to retire, low savings, household debt, and etc. When COVID-19 hits, the issues are even more apparent. These problems usually ended in either poverty or expansion of retirement age. The expansion of retirement age decision is made personally as the retiree realize they didn't have enough to retire yet, thus they need to keep working. While the age of retirement is 60 years old, they opt for other work such as Grab car driver and other freelancing work. Some even continue to work at company, which later will lead to population aging. Population aging is the changes in age composition of a population, such as increase in proportion of older persons. There will be more older people in the labor force rather than youngsters. Other than that, reliance on EPF or Employees Provident Fund also lead to lower savings by most people because they thought EPF is enough for their lifestyle after retirement.
I want to present about statistical information for insurance planning and retirement planning. I will start with insurance planning. As you can see at the graph of Malaysia total insurance industry written premium, Malaysia ringgit billion and annual worth 2070, to 2026. According to global data, the Malaysian insurance industry will grow at a compound annual growth rate (CAGR) of 8.5% from Malaysian ringgit 73.1 billion in 2021 to Malaysian ringgit 109.6 billion in 2026. In terms of written premium, led by the life insurance and pension segment, estimate global data, a leading data and analytics company. Malaysian insurance industry grew by 7.6% in 2021 after declining by 2.8% in 2020 due to the COVID-19 pandemic-induced economic slowdown. The life insurance and pension segment accounted for 75.8% of written premium in 2021. It is expected to grow at a CAGR of 9.5% during 2021 until 2026. The life insurance segment in Malaysia is dominated by endowment and unit-linked product, driven by better returns on this product as compared to bank deposit. To build on the popularity of this product and increase sales, many insurance offer attractive add-ons which include guaranteed annual cash payment, higher returns on maturity, as well as higher sum assured in case of accidental death. I will proceed with the statistical information for retirement planning. In Malaysia, employees must retire between the age of 50 and 60 based on the Malaysian retirement age. Besides, we also don't know our life expectancy starting from of 40 and above. Our performance, especially in heavy tasks, will decline slowly, followed by our age. The employer will replace the younger worker, and they can perform well to get the job done. If we are fired by the employer, how can we generate income? No matter how much we can work for our life, it still cannot guarantee the life we want. Not it is an excuse not to save for our future retirement. Having money will provide us in the future. Without any retirement or savings schema, it will be difficult for us to continue and survive in the future. We always have enough money to save the retirement. This is because we only have to pay 9% of our monthly salary, 30% or another 12% we have RM 5,000 ringgit in money salary based on the latest rate in February 2021 and above after the Malaysia Budget 2021, present by the Minister of Finance, will be paid by the company. If our reaction is not or we do not want to save in a retirement scheme, this is because we do not understand how the retirement scheme works.
Next, I'm going to proceed with conclusion. Malaysia's rapidly aging population is confronted with certain difficulties and challenges. Because of the above listed characteristic, the majority of Malaysians are expected to be old and impoverished. The Malaysian government is also expected to encounter fiscal rate issues in order to financially help the impacted population. The good news is that Malaysia has had a positive demographic dividend for the past 13 years, until 2030. There is still time to make plans. Despite the fact that there is only a small window for preparation, the people and the government are under pressure to handle the difficulties and challenges. Otherwise, Malaysia may face a retirement catastrophe. Moreover, special focus should be paid to strengthening government operation in order to design and implement the new policy on concern and difficulties related to the aging population, using multiple platforms, forums, blueprints, and coordinated effort from various government agencies. Malaysia should be exposed to early teaching on savings and financial retirement planning. Finally, it is critical for the Malaysian government to continue supporting the incentivizing retirement savings such as PRS, private retirement schemes, as well as examining the possibility of implementing publicly administered public pension plans, which are not currently in use in Malaysia. Subsequently, according to the Department of Community Health, Faculty of Medicine, National University of Malaysia, financial security lies at the heart of UHC, universal health coverage, and is one of the final coverage goals. Health financing strategy has a direct impact on financial security. Financial security is accomplished when direct payments to NHI, National Highway Institute, are made to access healthcare, hence avoiding financial hardship and threatening people's life standard. Financial protection necessitates cross-subsidization between the affluent and the poor, as well as between low-risk and high-risk investments. In Malaysia, there look to be widespread support for NHI. The number of persons who can be covered by NHI is determined by economic structure and progress. Before adopting the big policy, it is critical to understand why such policies were developed and how they may benefit the public. In addition, these features embody the core of health promotion, which is about giving individuals power over their health and so improving it. The phrase health education and health promotion are occasionally used interchangeably. Individuals and communities can benefit from health education by receiving health information, health insurance, and knowledge. This is accomplished by expanding their knowledge or changing their attitudes, whereas health promotion promotes medical and health insurance in communities in a more complete manner. It is calibrated to adapt to events that have a direct or indirect impact on health, such as shift in social ideas about health insurance.
The recommendation for insurance planning is to choose the best and most suitable insurance policies, which is either term policies, whole life policies, or endowment policies. The best for some people might not be suitable for others, thus everyone should learn and analyze which policies is the most suitable for them. Term policies are the most affordable. It covers a specific period, death and permanent total disability, however with no refund. Whole life insurance offers lifelong protection, which protects you as long as you live. It is paid in lump sum. While endowment policies is an insurance coverage with a reserve fund. Next, it is recommended to estimate the amount of insurance needed. The amount of money will be a representation of the life we want to preserve. The last recommendation is to commit and fulfill the payment on the agreed basis, either monthly, semi-annually, or annually. It might be hard at first to set aside some money for insurance, but it is worth the struggle. Insurance is important for protection and for unexpected events in the future.
The basis for a successful retirement plan is set by your present age and estimate retirement age. The higher the level of risk that your portfolio can handle, the longer you have until retirement. The majority of your assets can be in riskier investments, such as equity, if you are young and have more than 30 years till retirement. Although there will be some uncertainty, equities have beaten other products over lengthy time periods, such as bonds. In order to keep your purchasing power in retirement, you also need returns that surpass inflation. In general, your portfolio should be more focused toward income and capital preservation as you get older. This get more of your money in less risky investments such as ASB because it has a low risk, high dividend return and give investors extra bonus. Plus, your retirement strategy should be divided out into various parts. To choose the best allocation method, a multi-stage retirement plan must take into account different time horizons and related liquidity requirements. Additionally, when your time horizon shifts over time, you should be rebalancing your portfolio. Next, determine the retirement spending needs. You can determine the necessary amount of a retirement portfolio by having clear expectation about your post-retirement spending. Most people think their annual spending will only be between 70% and 80% of what it was before retirement. It's important to avoid overspending on unnecessary objectives. Since higher spending in the future requires greater savings now, setting clear retirement spending targets aids in the planning process. Additionally, if you plan to buy a home or pay for your children's education after retirement, you might need some money than you think. The total retirement plan must take these expenses into account. To make sure you are on track with your savings, keep in mind to update your plan once a year. Lastly, is by calculating the after-tax returns rate. The after-tax real rate of return must be calculated to figure out whether it is possible for the portfolio to generate the required income once the predicted time horizons and spending requirements have been set. Investment returns may be taxed depending on the sort of the retirement account you have. As a result, the actual return rate must be determined after tax. However, one of the most important steps in the retirement planning process is figuring out your financial status when you start withdrawing money. In conclusion, checking on your retirement plan doesn't just entail making sure you are saving enough money. It also means helping ensure the savings you have worked so hard to accumulate will be there when you need it.
That's all from our group, which is Group 6. Thank you for lending us your ears. See you next time.